What if you can use your corporation's retained earnings to create a tax-free retirement plan and still keep control of your money the entire time? I'm breaking down a strategy that's been used by Canada's wealthiest business owners for decades, the Corporate Insured Retirement Plan. I'll walk you through exactly how it works, why it's so powerful, and how you can build a private pension plan you fully control with no tax on the back end. So let's get started. CIRP stands for the Corporate Insured Retirement Plan. It's a strategy that allows incorporated business owners to move taxable retained earnings inside their corporation into a tax-sheltered life insurance policy. Here's the core idea. You build up cash value inside a life insurance policy owned by a corporation. That cash grows tax-free while you're running your business. Later in retirement, you borrow against that cash personally tax-free to fund your lifestyle. Your corporation takes out a participating whole life insurance policy. Your business is the owner and payer of the policy. The policy is on your life or a key person, and the corporation is the beneficiary. Your corporation funds the policy using retained earnings. These dollars would normally sit in your corporate account earning taxable interest or worse, doing nothing. With CIRP, those same dollars grow inside the policy tax-sheltered while earning dividends each year. Over time, the cash value inside the policy grows. You don't withdraw it, you use it as collateral. In retirement, you personally borrow the money from a lender using the policy's cash value as collateral. These loans are not taxable because they're not income. You can use the funds for anything: travel, lifestyle, investing, with no tax owed. When you pass away, the death benefit repays the loan and the remaining amount gets paid to your corporation tax-free. It's a clean, elegant strategy that gives you tax-free growth, tax-free access, and tax-free wealth transfer. Why is this a game changer for incorporated Canadians? Most business owners leave money inside their corporation doing nothing, or they pay themselves out and get slammed with taxes. CIRP gives you a way to grow corporate wealth tax-sheltered and convert it into personal retirement income tax-free. It's especially powerful because you don't have to pay personal tax to access the funds. Maintain control of your corporate dollars, avoid passive income penalties inside your corporation, and leave behind a tax-free benefit to your corporation or your family. One of the most powerful parts of CIRP is that you don't have to wait for retirement and able to benefit from it.
Yeah!
You can start using your policy's cash value during your working years to fund opportunities or create passive income. Here's how it works. As your corporation builds cash value inside the policy, you can borrow against that cash value at any time. These loans are typically issued by banks or lenders using your policy as collateral. You can take these loans personally and use them to fund income-generating opportunities, like investing in real estate, launching a second business, or buying equipment. How this works. The loan is not considered taxable income, so you access the funds tax-free. Meanwhile, your policy's cash value keeps growing uninterrupted. You create leverage, meaning your money is working two jobs at once, working inside the policy and outside the policy. Let's say you built up $500,000 in cash value.
Oh yes!
You borrow $250,000 to purchase a rental property. That property starts generating monthly rental income. You can use that income to repay the policy loan or redirect it into other investments. This strategy creates an ongoing cycle of wealth building. And the entire time, your policy continues to grow inside your corporation untouched by taxes. What this strategy looks like with a holding company. If your corporation is connected to a holding company, this strategy becomes even more powerful. Here's how it works. Instead of the operating company owning the policy, your holding company becomes the owner and beneficiary of the policy. The operating company can declare a tax-free dividend to the holding company through the capital dividend account if structured properly. The holding company then uses those funds to contribute to the CIRP policy. Why use a holding company? It allows you to build and preserve wealth separately from your main business operations. It adds an extra layer of protection and flexibility. It allows retained earnings to grow tax-free in a separate entity, not exposed to active business risk. Let's say your business generates $300,000 a year and you transfer $100,000 annually to your holding company. Over 10 years, that's $1 million in retained earnings in your holding company. Instead of sitting in your corporate account, that money is redirected into a CIRP policy owned by the holdco. It grows tax-sheltered, you borrow personally against the policy when you're ready, and your family receives a tax-free death benefit while your policy repays the loan. Using a holding company helps you keep your policy and your future retirement plan separate from the day-to-day risks of your operating company. Now back to our full example. Let's say you're a business owner in BC keeping $100,000 a year in retained earnings. Over 10 years, that's $1 million sitting in your corp. Normally, you'd pay yourself out a dividend and get taxed personally or invest it and pay capital gains tax. But with CIRP, you redirect that $100,000 a year into a corporate-owned whole life policy. After 10 years, that policy has significant cash value, $1 million plus depending on the structure. At retirement, you can personally borrow $70,000, $80,000 roughly tax-free each year to fund your lifestyle. Your business keeps the policy active, and when you pass, the death benefit pays off the lender and the rest goes to your corporation tax-free. Is this legal? Yes. This is a well-established corporate strategy used by accountants, lawyers, and business owners across Canada. It's 100% legal under Canadian tax law when set up properly. What if I don't qualify for life insurance? There's creative ways around that. You can insure a family member or a key person inside your business. Do I have to repay the loan in retirement? No, most people never repay it. The loan is simply repaid by the death benefit later. Check out this chart to see the difference between CIRP and traditional corporate investments. CIRP is for incorporated business owners with surplus retained earnings. Professionals with a holding company, anyone paying themselves in dividends and worried about future taxes, and Canadians looking for a private pension plan that they can fully control. If you're an incorporated business owner and holding money in your business, or plan to, don't let taxes eat away at your future. CIRP can help you keep more of your wealth, fund your retirement tax-free, and protect your legacy. Book a free strategy session and let's build your custom CIRP plan together. If this opened your eyes, then hit the like button, subscribe, and drop a comment if you want more advanced tax strategies for business owners. Let's take control of your capital and retirement.